Hello boys and girls and traders around the world, it's Nick here, and in this little video I want to explain and show you actually how to trade a range and how to manage a position in a big range or in a small range. In this case we have rather small range. It's the pair, it's the USD yen, and how it works is very simple. First of all, you have to identify the range, okay? And you cannot identify a range if you don't have at least 2 touches or 3 touches on support and resistance, so you can actually see that the price moves between a level up and down all the time, okay? So it's just basic stuff, but most of you already know how that works. So when this happens, when you see the price is moving up or down and you have, let's say in this case on the weekly chart, a powerful uptrend, as you can see the price is moving up, creating higher highs, higher lows, and it's kind of creating lower highs but still higher lows. So with other words, you can still see higher points on the chart after the retracements, and in the end the price creates a new high. And what happens afterwards here, you can see it's starting to range. So the price created a new high, it retraced back, and then for many weeks and months you see the price not really creating new highs on the chart. With other words, the price is not bouncing on support again, and here not creating new highs, so you don't see the price doing that, for instance, retracing and then moving higher. What you see instead is the price actually creating spikes here. Let me zoom in a little bit. Creating some spikes here on this chart, and you see the price closing up here in the next candle 1 week later, closing a little bit lower and a little bit higher, and then again lower. You have some red candles, some white candles. At that point you know that you don't have a direction anymore on the lower time frames. It's still an uptrend on the weekly chart, so for position traders, they just don't worry. They have still their longs in probably for months and years, but everybody else who trades in lower time frames knows that we don't have a direction right now. The focus is still on the longs, reason being because the main trend is still just up and the price is moving higher in the end. So what you do, you switch to your lower time frame and you figure out what's going on. And when you switch to the daily chart, you will see, let me get rid of the lines for now, that price retraced and we had some crossovers, created some 1, 2, 3s, lower lows, lower highs. But what happened after these lows here, the price retraced back to the 36 almost, did not create lower lows on the chart. It came back up, stopped at the same area where it stopped before, and in this case it was the 102, 60, 70 area, moved lower. It did not really create a lower low, right? It was almost at the same level where it stopped before, a little bit lower. With a spike doesn't mean anything, so the price did not move lower and created a lower low on the chart, right? Like this is the lowest point. It did not move lower here, did not move lower there. Then what happens? It moves up, it creates a new high, and what we expect then usually is, okay, price could move lower, it will probably do this, take a breather, and after reaching the previous resistance acting as support, it will move higher. But it didn't do that. So what that is here is actually also what we could call a false break, or false breakout. The price did not move higher, it came back, and look what happened. It stopped at the same area where it stopped already twice, and that tells us, the third touch here, when I draw a support line in this area, not exactly at the lowest point, not exactly at, let's say, the highest, but in between, like between the bodies and the tails, we leave the line and say, okay, this area is the area of major support, because we have the price touching this area for 3 times already, the third time, okay? And that is telling us, especially when it's on the higher time frame like the daily, that the price at that moment in time does not want to move lower, because what happens, you have 1, 2, 3, 4, 5 daily candles, price does not move lower. So what's likely to happen. It will bounce again, trying to reach the highs. Now, what highs, or which highs are we talking about? First of all, the previous ones where we have the most touches here, this would be the target. In extension, of course, the high here. Yeah, so we know we have a bottom formation because we have 3 touches. We actually have 4 touches. You can count it because it's really spiky here and the candles really closed higher, but easier to spot, of course, 1 to the last 3 touches here in this area. Okay, and now what? Okay, when the price does that, we go and check the highs and say, okay, these up here, these 2 touches there, where we have multiple candles and we can see the price does not move higher, this is the area of major resistance. Yeah, this was a false break. The price only once broke this. It did not confirm anything. It didn't stop here on the retrace and moved higher. It came back right where it actually came from. Yeah, it moved back where it came from to down here, bounced again. So what we say, okay, we have for sure a support because we have already 3 touches, and we know if the price comes back to here, next time for sure we can bounce trade it aggressively, meaning that if the price comes back to this area, to this line, we will look for aggressive long trades. Okay, now up there it's not confirmed that much because we have 2 touches. The third one actually breaks. Okay, so we don't have powerful resistance at that moment in time here, but afterwards what happened, the price actually touches this area, retracing a little bit. Okay, this would be the 3rd touch, then it moves higher, breaks out, and again, what do we expect? We expect the price to do something like this and move higher. Yeah, if we really expect a new trend, or the continuation of the uptrend. It didn't happen. Instead, the price moved lower and found support again. At that point, you know, because you have already 3 touches where the price hit this area, moved away about 130 or 140 pips, came back, bounced again, did what it did, came back, bounced again. So this is again a false break. Price comes back very quickly. You are not scared about that, seeing the price it comes down very quickly. First of all, now you know that this is a proven powerful support. You also know that you have a big uptrend, and this is acting as support, this whole area. You also have the 200 EMA, but just ignore it for now. We just go over the thing very simply. And then we say, okay, if that's happening, the price is reaching this area, what we do is we aggressively place a buy order even before the price is reaching. You can do that a day before, you know, here with a stop way below these lows. Okay, you can even place a stop below the lowest point, because what could happen, the price might break the support, move down 30-40 pips, spike, and then go back up. So to make sure, because you have a little bit of history, and that's the lowest point before the range, if it's not too far away, in this case only like 70 pips, and you measure and you say where are the highs, about 140, 150 pips away, a stop of 70 pips to make 150 is great. So you place the stop here or below the lows. It's up to you really, depending also on your experience level. Then you go long, target this line. You also take incremental profits. So we like to split the position into 2 or 3 parts. In a small range like this, 2 parts are enough. What you do, if the price is bouncing on this, you know, maybe moves against you a little bit, and then start making profit. In the middle of the range, about 1-to-1 with your stop, you take out incremental profits, and you take out the rest when it's getting close to the previous resistance areas where you have your 1, 2, 3 touches now also confirmed. You ignore those spikes. Why? Because these here were false breakouts. What is important now, the 3 touches where the price really had trouble to break. Now, to break out. So if you have 2 lots running, okay, you take your second lot up here, or what you can do, you can also say, hey, you know what, I leave a small position running in case it breaks again. Maybe I can make more profits. Okay, so you take out 1.5 lot, for instance, leave 1 lot running in case it really wants to break out. So it didn't happen, price comes back. So now what? At that point you already know that this area is major support. It was proven so many times. So what you do again, you can take your longs here, take out half of it there, and the rest when it's reaching the resistance. So what happens here? Price comes back down, and you see why it's so important to first leave your stop below the lowest point in this example, because what can happen? Price might move against you, in this case about 40, 50, 60 pips actually, and then moved up again. Okay, so again a powerful bounce trade to go long. Here again you can go short, of course, the same story. Target this, go long again, target this, go short here, which we did actually live, most of you probably remember. Target again the lows down here, and what happened here? Price reached this lows again, and what did we do? Yeah, you might say, hey, it already touched 1,000,000 times, will it not break out? Yeah, maybe, but you never know. And the chart, the trick is the chart already tells you what it wants to do. And as long as the chart is bouncing on a major support area, what do? You take a long again, try to make profits. And in this case, about the management again, what we did, we placed the stop below the lows just to make sure we don't have any surprises with spikes. Price went back up about 50 pips, and the stop is away about like 70 pips. So we try to make like at least in terms of profits 1-to-1, so take half of the position out when it's reaching the 70 pips. But another trick here, if you don't feel comfortable, you know, it's the main trend is up and it will probably go there if the move is powerful. But if you get nervous and you say, hey, you know what, if I draw my line, I have some resistance here, price already is reaching this area, I want to take something out because I ended this aggressively again, you know, bounce trade. So can I do that? Yes, you can. But how do you do that? You have to minimize the stop. Okay, you do it to keep the stop small. Like, what do? Now that you have your first white candle, daily candle, unlikely that this will go down today because this candle will close in about 2 hours. So what do? You can take your stop, trail it below the low on the chart. Let me make this bigger. Okay, and then say, okay, what about the stop now? It's 30 points. It's 30 points. Price is in profit with about 40, 50. Yeah. So what do? You take out half of the position because you have a stop now of 30 points, and the profit's already bigger than the stop. And what you do, you go down here, here's the position, one standard lot, you take out 0.5, which is half a standard lot, close it, and now you have still half of the position running. Okay, what that means is, in case the price decides to go down for some reason tonight and hit that stop, okay, you keep 10 pips, not a big deal, not a great trade or something, but at least not a loss. On the other hand, if the price goes down, hit the stop, and in the end moves up to here, you would be out of the trade, of course, because you trailed the stop. And so there's always a plus and always sometimes a disadvantage. So you did that because you want to take some incremental profit. So if nothing crazy happens, the price in the end will probably break this, move higher to here, or maybe up to here. So if the price reaching the highs here, you take out the rest of the position. Yeah, basic stuff right now. In case the price breaks the resistance, or you see it's really breaking, okay, you can take out 0.30, leave a tiny position running, and if the price in the end decides to break resistance and reach the highs again, you'll probably make 300-400 pips more, even with a small position, and make more pips, and therefore also grow your account a little bit quicker. Okay, so this is basically how we go and do these things, and I hope this video helped you with bounce trading, identifying a range and then aggressively bounce trading in a small range. You can do the same thing, of course, in a big range. Okay, that's for today. Again, I hope it helped. Catch up with you soon. So have a wonderful day. Bye for now.